Are you looking to grow your wealth and secure your financial future? Investing is a powerful tool that can help you achieve your financial goals. For beginners, the world of investing may seem daunting and complex, but with the right knowledge and guidance, anyone can start building a successful investment portfolio. Investing entails putting your money into various financial instruments such as stocks, bonds, real estate, and mutual funds with the expectation of generating a profit over time. While investing always carries some level of risk, it also offers the potential for significant returns if done wisely. One key concept that beginners should be aware of is passive income. Passive income is money earned with little to no effort on your part. Unlike active income, which requires you to trade your time for money, passive income streams continue to generate revenue even when you're not actively working. This can provide you with financial stability and freedom, allowing you to focus on other aspects of your life while your money works for you. Imagine waking up in the morning to find that you've made money while you were sleeping. This may sound like a dream, but with the right investment strategies, it can become a reality. By investing in assets that generate passive income, such as dividend-paying stocks, rental properties, or online businesses, you can create a steady stream of income that continues to grow over time. The idea of earning money while sleeping may seem too good to be true, but it is a real possibility for those who are willing to put in the time and effort to learn about investing. With the power of compounding returns and the right investment mindset, you can set yourself up for financial success and achieve your long-term financial goals. So, are you ready to start making money while you sleep? When it comes to investing, there are several key terms and concepts that beginners should understand to make informed decisions about their financial future. Let's break down some of the basics and explore different investment options that can help you get started on your investment journey. First and foremost, let's define some key investing terms. Stocks represent ownership in a company, and when you buy shares of stock, you become a shareholder and have a stake in the company's profits and losses. Bonds, on the other hand, are debt securities issued by governments or corporations, where investors lend money in exchange for periodic interest payments and the return of the principal amount at maturity. Mutual funds are investment vehicles that pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. Diversification is a crucial concept in investing that involves spreading your investments across different asset classes to reduce risk. By diversifying your portfolio, you can minimize the impact of any single investment performing poorly and potentially increase your chances of achieving positive returns over the long term. When it comes to investing, understanding the relationship between risk and return is essential. Generally, investments with higher potential returns also come with higher levels of risk. Risk refers to the possibility of losing money on an investment, while return is the profit or loss generated from an investment over a specific period. It's important for beginners to assess their risk tolerance and investment goals to determine the right balance between risk and return in their investment strategy. By familiarizing yourself with these key investing terms and concepts, you can start building a solid foundation for your investment journey. Whether you choose to invest in individual stocks, bonds, mutual funds, or a combination of assets, understanding the basics of investing can help you make informed decisions and work towards achieving your financial goals. Creating a personalized investment strategy is essential for beginners looking to grow their wealth and achieve their financial goals. By understanding your objectives, risk tolerance, and time horizon, you can develop a plan that aligns with your unique circumstances and sets you on the path to financial success. Before diving into the world of investing, it's crucial to set clear financial goals. Whether you're saving for retirement, a down payment on a house, or your child's education, having specific objectives in mind can help guide your investment decisions and keep you focused on your long-term aspirations. Long-term planning is a key component of successful investing. While short-term market fluctuations may cause temporary setbacks, staying committed to your investment strategy over the long term can help you weather market volatility and potentially achieve higher returns. By taking a patient and disciplined approach to investing, you can harness the power of compounding returns and grow your wealth steadily over time. When it comes to crafting your investment strategy, it's important to consider your risk tolerance. Different investors have varying levels of comfort with risk, and your risk profile should influence the types of investments you choose. For conservative investors who prioritize capital preservation, a strategy focused on low-risk assets such as bonds or dividend-paying stocks may be suitable. On the other hand, aggressive investors who are willing to take on more risk in pursuit of higher returns may opt for a strategy that includes growth stocks or alternative investments. By tailoring your investment strategy to your goals, risk tolerance, and time horizon, you can create a roadmap for achieving financial success. Whether you prefer a conservative, moderate, or aggressive approach, understanding your personal investment style can help you make informed decisions and build a diversified portfolio that reflects your unique financial objectives. Passive income is a game changer in the world of finance, offering individuals the opportunity to earn money with minimal ongoing effort. By exploring various passive income streams, beginners can supplement their active income, build wealth, and achieve financial independence over time. Let's delve into the benefits of passive income, the potential it holds, and some lucrative opportunities for those looking to generate income passively. One of the key advantages of passive income is its ability to complement active income sources. While active income requires you to trade your time and effort for money, passive income allows you to earn money while you sleep, travel, or pursue other interests. By diversifying your income streams and incorporating passive sources, you can create a more stable and resilient financial foundation. Investments present a prime opportunity for generating passive income. Dividend-paying stocks, for example, provide shareholders with regular payouts based on the company's profits. By investing in dividend stocks, beginners can enjoy a steady stream of income without actively managing the day-to-day operations of the business. Real estate investments, particularly rental properties, offer another avenue for passive income. Landlords can earn rental income from tenants, allowing them to generate cash flow and build equity over time. In the digital age, online businesses have emerged as a lucrative source of passive income. From e-commerce stores to affiliate marketing websites, online ventures offer the potential to earn money around the clock. By creating valuable content, products, or services that attract a steady stream of customers, beginners can monetize their online presence and generate passive income streams. For beginners looking to dip their toes into the world of passive income, exploring these opportunities can pave the way to financial freedom and flexibility. By leveraging the power of passive income streams, individuals can build wealth, diversify their income sources, and ultimately achieve their financial goals with greater ease and confidence. Strategies for making money while sleeping, maximizing passive income through strategic investments. Making money while sleeping may sound like a far-fetched idea, but with the right strategies and investment vehicles, it can become a reality for savvy investors. By exploring practical tips and techniques for generating passive income through investments, beginners can unlock the potential for financial growth and wealth accumulation. Let's delve into some key strategies that can help you earn money effortlessly and build a solid financial foundation for the future. One effective way to generate passive income is through dividend-paying stocks. Companies that distribute a portion of their profits to shareholders in the form of dividends provide investors with a steady stream of income. By investing in dividend stocks with a history of consistent payouts, beginners can enjoy regular cash flow without actively managing their investments. Additionally, real estate investment trusts, REITs, offer another avenue for passive income, allowing investors to earn rental income from commercial properties, residential complexes, or other real estate assets. The concept of compounding plays a crucial role in wealth accumulation through passive income. By reinvesting your earnings back into your investments, you can harness the power of compounding returns and watch your wealth grow exponentially over time. As your investments generate returns, those earnings are reinvested to generate even more income, creating a snowball effect that accelerates your wealth-building journey. Setting up automated investment systems can streamline the process of generating passive income and make it easier for beginners to manage their portfolios efficiently. By automating contributions to your investment accounts, setting up dividend reinvestment plans, DRIPs, or utilizing robo-advisors, you can ensure that your money is working for you even when you're not actively monitoring your investments. Automation can help you stay disciplined, minimize emotional decision-making, and maximize the potential for passive income generation. By implementing these strategies and leveraging the right investment vehicles, beginners can pave the way for making money while sleeping and achieving their financial goals with greater ease and efficiency. With a proactive approach to passive income generation, you can build a sustainable source of wealth that provides financial security and freedom for years to come. As we wrap up our discussion on investing for beginners and the potential for making money while sleeping, it's essential to reflect on the key points covered and the actionable steps you can take to kickstart your journey towards financial independence. By starting early, embracing passive income opportunities, and taking proactive steps to grow your wealth, you can set yourself on a path towards a brighter financial future. Investing early is a crucial component of financial growth and wealth accumulation. By harnessing the power of compounding returns over time, you can maximize the growth potential of